Okay, so accompanying the prior video on um, trading US 500 ORB inside day setup, I'm now giving a bullish scenario. In the prior video, we talked about how the inside day can go one of two ways. Um, bullish, bullish above the inside day highs, bearish below the inside day highs. So it's essentially a breakout trade or a breakout and reversal trade. That is the theory around the inside day signal day. Now, what I do is I use the opening range of Wall Street, which is for me between 9:30 a.m. and 10 a.m. 10 a.m. gives us a new timing rotation. Today we had major red news. That creates volatility. We usually want to stay away from that type of volatility because it can trap traders one way or the other. I mentioned in the prior video that the closing price would be a major factor, even though we had broken below, firmly below, the opening range box. Well, not firmly below, but we traded firmly bearishly into the low, trapping traders short. I talked about the closing price being an obstacle. Now, I trade off a 15-minute chart, 5-minute charts, 3-minute charts, and neither of those gave us a close below the closing price. As you can see, I'm ready to take the bait if we're below on a closing basis, below the closing price, but we didn't get that. Instead, we got a fake out low of the closing price, a bearish one at that, but nonetheless, a bullish switch bar followed by a momentum bar all the way through those VWAPs and 20 EMA. And if I was brave and not busy making videos and doing education, I would have taken it actually with hand on my heart. This would have been my, now hold on, 10, 15. Hold on, let me get on a 5-minute chart. Sorry. No, over here. This would have been my entry. However, cautiously, because we've still got this resistance. But the thesis is that this was a trap, and we can be bold and assume that we're heading to the other side of the inside day highs. Bullish breakout, 3-star trend. We've got a higher time frame confluence guiding us, giving us conviction that we're heading in the direction of the trend. And using the Stacy Burke signal day indicator, we only have to glance left and see that we have an inside day from the start of this week, whereby we would assume that there will be liquidity above. And in that instance, then we can assume a target for our bullish trade setup above the inside day stops, potentially to the high of the week. Now, I might be quite ambitious in targeting a 200% range expansion of the Wall Street opening range. But we can always do so and then manage the position as we head higher. If indeed, of course, this turns out to be a positive outcome. It may not. We have non-farm payrolls tomorrow. This could just be a trap both ways. Markets do one of three things. They break out, pull back, and continue. They break out, pull back, and fail, or they go into a trading range. So I could be trapped. This could just go sideways in a range. Hence why I have a stop loss, because I will manage my risk. If I get stopped out, it's one trade out of thousands of my career, and it really doesn't matter because I'm managing my risk, trading a small portion of my capital so that with a trading strategy with an edge that can lose many times over can still be a positive outcome when it all comes out in the wash. So manage your risk, trade your setup, and rinse and repeat. So that's the thesis. I hope that makes sense. We had a bullish setup above the inside day highs, above the closing price, fake out low of the opening range, bullish momentum through the opening range, above the 20 EMA, above the VWAPs, breaking out of the London highs and the Asian highs. The trend is up across multiple time frames, and that is our setup to go long, targeting the inside day stops from Monday as a target. A 100% range expansion comes below those inside day stops, so I assume if we do indeed head higher, then we're attracted to those inside day stops, and then this could continue in a 200% range expansion, potentially to take on the value area high from Friday, which is a naked value area high. And then we have the Wall Street opening price as well, which is naked, and that all aligns with our 200% range expansion, which was the breakdown area of the highs, the all-time highs. There's the previous month highs. There is the A-top, all-time highs, and that essentially is the breakdown point. So all of this is a naked area of liquidity that the market could indeed move up to. Again, I stress this isn't guaranteed to work out. We have non-farm payrolls tomorrow. This could all just be trapping traders both ways, and so be it. But at the end of the day, we roll the dice, and that is the game that we're in.